Welcome back. You're watching Business Morning on Channels Television. We're still talking about the Central Bank of Nigeria's new FX policies that was released on Monday. Now, a number of issues have come up and there's been a lot of reactions with regards to this particular policy. Joining me now to talk a little bit about this as well and share his perspectives is Johnson Chukwu, who is the Chief Executive Officer of Carry Assets Management Limited. Good morning to you and thank you for joining me.
My pleasure. Good morning.
Coming in from Monday up to today, there's been a number of reactions from market operators, from analysts, and of course from economic policy analysts such as yourself. But do you think these reactions have been initial knee-jerk reactions, if you'd like, taking a look at how the rates have kind of stabilized at the street level and, well, across other segments of the market?
Well, the reactions were quite expected. And what I mean by this is that if you look at the exchange rate that dropped about 520 naira to a dollar, that rate was basically driven by fear and lack of confidence in the system. But with the change in policy, with the new CBN forex policy, I mean, you see a situation where people are expecting that naira will further appreciate, and therefore we are beginning to see a lot of people who are holding positions begin to release those positions to the market. You see, basically what has happened is not necessarily just because we are not having enough supply of forex. It's also because in the past, some of the policies may have constrained, may have encouraged people to fly to safety, to want to hold back believing that the naira will further depreciate. Now that we're seeing a policy, which all of us have been asking for all this while, is that, look, let's have great liquidity in the economy. Let's allow for the interplay of demand and supply to largely determine the exchange rate. Of course, the central bank will still play a role of intervening in the market. And we've seen the CBN adopt a policy that is close to that, and that's how the market is reacting the way it is.
But then you would agree that a lot of analysts have actually said that this forex market requires efficiency of a kind. Talk to us about what the characteristics of an efficient forex market really should look like prior to when these new policies were released by the central bank.
Well, an efficient market or efficient forex market in this particular instance will require many buyers and many sellers. And then you also have situation where the forces of demand and supply will determine the price, will determine the clearing price. Previously, we had what we call a largely managed float, where CBN was virtually the sole supplier. The tobacco market was almost dead. But now what the CBN has done is to reactivate the tobacco market and also remove the restrictions on determining how the banks use proceeds of FX that they have got from the market. So that way, you're going to see a lot of liquidity in the market. You're going to see improved level of liquidity. And that improved level of liquidity will lead to a situation where you can go to the market and buy, and the market will meet your demand at the clearing price. And you also can come to the market and supply your FX, and then you take it from the supply. So those factors are what we have been looking for. A situation where there is that play of demand and supply. And that demand and supply, for those demand and supply forces determine the market price. What the CBN has done is to try to clear the arrears of made demand, and then supply funds to the tobacco market. You saw the 500 million was supplied to the market. The market could only take only $371 million. And that means that today we have that level of liquidity in the market, and that you also observe that only Thursday, the central bank tried to sell and sold another $230 million in forward deals of 30 days and 60 days. So in effect, I want to believe that CBN has largely met the arrears of built-up demand, and then what will be coming to the market will be fresh demand. And as CBN does not intervene in the market, it will create that pool of liquidity that we need for an efficient market.
But then some have argued that the central bank should participate in the market as a market maker and not the primary source. What do you think?
Well, we have peculiar situations in our country. We are a mono-export economy. People make the mistake of saying we are a mono-product economy. We are not a mono-product economy, we are a mono-export economy, because if you look at the structure of our GDP, you see how largely diversified economic base. But in terms of export earnings, crude account for 90% of foreign exchange earnings. And CBN is the recipient of almost 80% of that crude proceeds. So that gives CBN an undue advantage in terms of receipt of inflow of foreign exchange. And because they receive about 80 to 90% of foreign exchange earnings, they have a market dominant position. So it's not like what you have in the more advanced countries where multiple exporters, multiple export products, several banks receive export proceeds earnings, and then the supply sources as multiple. But what CBN has done, recognizing this position, is to now sell it to the market, sell to the banks in the interbank market. As that volume that is supplied to the market increases, then the banks will trade among themselves. And that's why I said you're going to have a pool of liquidity in FX. And that will automatically address people who want to, the end users' needs.
So addressing the end users' needs will also have, well, at some point, allowing unscrupulous elements to take advantage of the markets, because you're beginning to see some people go to the interbank foreign exchange market to buy dollars from there and take it to another segment of the market where, of course, you have a higher demand, but you don't have so much supply, because we're still seeing that segment of the market, that's the parallel market, needs as much dollars as it can get. You still have some people going to that segment of the market to access it.
Well, you have to look at a couple of things. In the first place, if you look at the issue you mentioned, scrupulous demands or people who are round-tripping, they buy from the official market and go to the foreign market. That's because the incentive to do that is existing because the widespread between the parallel market and the official market. If there's enough liquidity in the interbank market, the spread will narrow, which we've seen. We've seen a narrowing from about 520 to about 480 in just a matter of 4 days. So if that liquidity is sustained, if CBN has a way with that to sustain that level of liquidity in the market, you're going to see that spread thin out. We've seen in the past where the spread was something like 1 naira, sometimes less than 1 naira. And I also want to tell you what of this CBN has done, which for me, I think they need to be commended. They recognize that demand for basic travel allowance, personal travel allowance, business travel allowance, the demand for medical bills and the demand for school fees are inelastic.